Okay, good morning once again. This is just a final class of our sessions that we've been having, and we have very limited time today, just 30 minutes, and actually we have spent 5 minutes out of the 30 minutes, so we have 25 minutes to go. So we have to do everything sharp, so that I'll be able to dish out all the instructions and the guidance that I want to dish out. So as you can see on the screen, we have trading strategy session, and we are having the final class. So I quickly develop this presentation so that we have a guide as to what we are to discuss today. So we're going to the next on the presentation. Now, the area of discussion, our areas of discussion, one, we are going to look at top-down analysis of the market. How do you do top-down analysis? We're going to look at that. We're going to look at market structure. Though we have done all this before, just a kind of recap and revision. We're going to look at trading strategies. There are two main strategies that we discuss here, and one is discretionary and one is mechanical. Discretionary in the sense that you don't need any indicator, and the trader will only use his discretion to enter the trade, and we're going to look at that, and that is break and retest. Mechanical is where you use indicators, exponential moving average 21 and 50, then you use relative strength index, which is RSI, to get signal so that you can know when to enter a trade and when to exit a trade. So that is a mechanical trading. Mechanical trading is simply when you're taking your signal, your entry exit signal from an indicator. So entry candlestick pattern, all these candlestick patterns we've discussed in the past. We have engulfing pattern, pin bar, shooting star, evening star. So we are going to discuss that. And ultimately, the most important thing of all this is risk management. How do you manage your risk? If you're having a $100 trading account, let's say you are trading with, let's say $50, or let's say $100, or let's say $200, how do you manage the risk in the market in such a way that you don't blow the entire account, even when the market goes against you? These are the things we'll be discussing under that. So without wasting our time, let's quickly jump into the chart so that we look at the next, what I call it, all these topics together. So the first thing we're going to look at is top-down analysis. The next is market structure. And before we go to trading strategy, so let me share my trading charts with you. Can you see the screen?
Yes,
Hello?
sir.
Okay, great. So,
hello, sir. Yes, sir.
Yeah, okay, great. So the first thing that we have to look at is when you're looking at top-down analysis, the moment you open your trading chart, this is you can see this is deriv. This is binary.com trading. This is an MT5 MetaTrader 5 trading chart. So it's deriv. That's deriv is also binary.com. So now,
okay,
when you want to do top-down analysis, what are the things you need to look at? Now, immediately you open your chart, you go to higher time frame. That's what we call it top-down analysis. Something like weekly time frame. You go to weekly time frame. You want to see what you are after when you are looking at all this is that you want to see where is the market currently, and then if you will agree with me, you will see that the market is currently around here, around this place now. The market is currently around this place. Let me blow this thing up so that I don't like being blown up too much. Okay, so the market is currently around this place. So what is the market doing? You discover that we have this long candle, bearish candle here, that shows that sellers took over the market and they pushed the market down for a whole week. Because this is a weekly candle, weekly chart. So when you look at what it means is that each candlestick is 1 week. It takes 1 week before each candle can be completed. So like this particular candlestick now is 1 week, but it has not been completed. So this candle is 1 week, 1 week, 1 week. So you just want to see the perspective where the market was originally. When you look at it, the market was originally in an uptrend. If you draw a trend line, you discover that the market was originally in an uptrend. Can you see that? So it's originally originally in an uptrend, because you see this trend line that I just drawn now. It's the market's coming bouncing, and you discover that price is going up. So that is just for you to know. So, but you don't do anything on here. So you now, this is your higher time frame. This is weekly. Then from there you move down to daily time frame. You want to be recording what you have observed. You have your jotter by your side. Okay, weekly time frame, what does it say? Bullish. But currently on weekly time frame, we are seeing some bearish engulfing or bearish trend. Because when we go back to weekly, let's go back to weekly. You can see that on weekly here. So you can see that on weekly here, you can see that what we can see is that we are still bullish, but it's showing some sign of bearish, because we can see that price is making higher high. When you look at this place, this is a high. Let me use the arrow. This is high. This place is a high. This high, the next high that form is higher than that high. Can you see this high is higher than this high on weekly time frame? This high is also higher than this high. Sorry. This high is also higher than this high. So it's forming high as it's going up. So it shows to you that bulls are the buyers are the one pushing the market. So it's an uptrend. And in an uptrend, the only thing we look to do is buy. But we cannot buy, we cannot enter a trade on weekly time frame. No, because we don't have such kind of trading account that can manage this kind of time frame. So, but suddenly, what did you see? You started saying that those high that were, because this high, this is where we started, right?
Yes, sir.
This is where we started. High. This high is higher than this. This higher high. This is another higher high. This is another higher high here. Yes. And when you look at what is happening here, this high cannot reach this place. Can you see? So it means this high is lower than this one. Something is about to happen, because they cannot break this high again. You see what I'm saying? So
yes, sir.
So what that means is that you start looking at the trend, and for yourself to know, okay, this is what's about to happen in the market. So when you look at this one, I don't want to take any other arrow, so that I can just move this one and be using it. So this high here is lower than this one. And in a downtrend, you'll be continuing to see series of lower high, lower low, lower high. Look at this high also, it's lower than this one. So it's telling you that something is about to change in the market. Though they came back, they pushed back, then we're starting having another, this high is higher than this high. Started showing bullish. But when you look at the rate at which these long candles are coming, that towards the downside, you discover that sellers are entering the market with force. So you just have to take into consideration all this understanding. So if we delete those arrows, now we go to, you record this weekly time frame. What is it saying? Bullish or bearish? You can put it in front. Then you go to another time frame that is lower than that, which is daily time frame. You click on that. On daily time frame, you discover that we also see that if we start from this place, this is a high, and this another high. Can you see that? Another high, or this one? Here, they are high here. And this another higher high, because this place is also higher than this place. So if you come here, this another higher high. And this place is another higher high. You can see that it's another higher high. And this place is also higher than this one. Can you see? But immediately after that, what can you see? You discover that price dropped up to this level. From here now, price started dropping and broke this level here. This level here was broken. That's not what I'm saying. It was broken. Then once this level was broken, it shows to us that something has changed in the market, because the moment you violate a market structure, it shows that the original trend is about to change. We will get this thing very clearly when we get to lower time frame. So, but let's continue doing our top-down analysis. So, for me right now, what I'm seeing currently, because I am not after the entire thing that's happening here, I'm after this thing that is happening currently. Only this place is my concern now. When I want to enter a trade, this is what I'm seeing currently. Can you see the area where I mark now?
Yes, sir.
Okay, so this is my area that I'm concerned about. So you discover that when you look at this place, this is like a neckline that was violated. It has been broken. So, and it's a signal that bears have taken over this market. So for me, on daily time frame, we are bearish. So that's what I will record in my jotter. So then the next thing that we have to do is to go to another time frame. Because we are doing top-down analysis, we go to 4-hour time frame. Now, mostly what I do is I don't even go to weekly, I don't even go to any other time frame. I only go to what I call it the 4-hour time frame and look at the trend on the 4-hour time frame. Now, when you look at the trend on 4-hour time frame, you would agree with me that from time, the 4-hour time frame has been a down trend. You agree with me, right? But when you look at this, when you look at it, if we go to line charts, let's go to line charts. You discover that the line chart is showing that the trend is down. But suddenly around here, now let me show you something. Suddenly around here, we discover that each time the trend is coming, it's coming from here, it got here, it pulled back, right? Then it broke this level here, then went down, pulled back, went down, then pulled back, then went down again, pull back, went down again, pull back, went down again, pull back. Has there been any time that this pullback break the previous pullback? Did it break it? No. You can see that because this is your low, this is your low, right? This is your high, this is your low, this is your lower high, lower low, lower high, lower high, lower low, lower high, lower low, then lower low, lower high, right? This is our lower low, lower high. This is our lower low and lower high here. This is another lower low and lower high. But suddenly something happened around here. When we have this lower low here, we broke this lower high by here. Can you see? It's a signal that this structure is about to change. And then when you look at this, it's forming a kind of W. Can you see? W, kind of double bottom. So it's a signal that the trend is about to change. But later the pushback, it was going down. But what later happened? We form a kind of inverted W here. You can see this.
Yes, sir.
So you can see this. We form a kind of inverted W. Then we broke this lower high here again. You know what I'm saying? Then we started moving. So when we see that a lower high or higher low is broken, that is to tell you that the trend has changed from bearish to bullish. You know what I'm saying now? So they are taking price up now. So you'll be looking to buy around this trend. But originally when you were coming, you'll be looking for sell because you're in a downtrend. But right now, uptrend has taken over. You know what I'm saying? So let's go back to candlestick pattern. So you see what I'm saying? This is your low, your area now. And can you see price has broken this place? Can you see that? Then it's the signal for you to look for buy opportunity. And you discover that all these places, originally when you were coming, this is your lower high. And this another lower high. This lower high did not reverse up to the level that it go beyond this place, right? Can you see? It stopped there. Can you see? Now, I need you to pay attention to all these things because they are technical analysis that will help you. This is another lower high. It never got to this place. Can you see? So you can see the market reversed, but it never broke this high. Can you see? Up to this.
Yes, sir.
Market still reversed around here, but it never broke the previous lower high. You see? So, but suddenly somewhere around here, you see market reversing and broke this previous lower high here. Can you see? So we even broke up to two structures. We broke this place and we broke this place. Can you see that? So it's a signal that the trend has changed. What you'll be looking for in this kind of area now, since that changes, what we call bullish. This has now become bullish. You'll be looking to buy in this market. You know what I'm saying? So with that one now, how do you trade? So that is top-down analysis. So for me, I look for my higher time frame whenever I want to trade is 4 hour. Then I'll look at my trend on 4 hour time frame. This is 4 hour that we're looking at now. Then I will now go to 1 hour to look at, okay, what is the current trend on 1 hour? Is it in line with what is happening on 4 hour? If the two of them are saying the same thing, then fine. I will know which direction I'm going. So now, for example, this one now, I'm looking to buy in this market. I'm not looking to sell. You know what I'm saying? I'm looking to buy because this is bullish already now. So I'll go to 1 hour now. Don't forget we're doing top-down analysis. Can you see 1 hour? Can you see what I'm telling you? You can see that immediately it reversed. We have bullish trend. Can you see this?
Yes, sir.
So that is how to do top-down analysis, and you agree with me that with that, for example, now if I've seen I've seen this, then I will now say, okay, fine. I just say this is the way to do it. Just write in your jotter, just say 4 hour. Just say 4 hour. I normally put equal to, because I'm looking at the current trend, it's a bullish. Now, let's that text. Let's say 1 hour. 1 hour is also equal to bullish. Then, once I know the two of them are in agreement, in a bullish trend, that is uptrend, what do? We only look for buy. You see what I'm saying? We only look to buy that market. So now I will go to my entry time frame. My entry time frame are two. I trade on 5-minute time frame and I trade on 15-minute time frame. So whichever one that comes in handy is what I use. So I will now go to 15-minute time frame. I already know that I'm looking for buy opportunity. You see what I'm saying? So, so I will not be looking for any other thing except to buy this market. Let me do this. Let me go to 1 hour and mark where we started this this particular trend. We started around, let me just mark it here. We started around here. You can see that black line.
Yes, sir.
So let's go to 15 minutes so that we can go to 15 minutes. Then we look for that area. Yeah. So this is the area, right? Now,
yes.
How do we now enter our trade? That's where the next thing comes in. Structure, that's strategy now. You'll be looking for, the first thing that we want to discuss is break and retest strategy. Now, when you look at this place, you discover that price moved up to this level, right?
Yes.
We returned, we reversed, we have the retracements around here. We pull back up to this level, right?
Yes.
Now, we come back, we broke this high up to this level, right? Now, this is the area where we reversed.
Yes.
I will be waiting for price to reverse up to the highest part of this place that we broke so that I can enter a trade. But when you look at it, market did not reverse up to that level, right?
Yes.
And no problem, because if I don't trade I will not lose my money. So I will just continue to follow market. I will not enter a trade. Then I will be looking for where price will reverse again. When you look at it, it reversed here. You see that up to this level, but it never reached this level, right? So it reversed here. Then this is the highest part where it reversed. So I will mark that highest part where it reversed. What happened this time around? Did market reach the place?
It's going to, yes.
It returned to that level, right?
Yes, sir.
You touch it, right?
Yes, sir.
That is how to do it. So when you mark that area like this, can you see that? When you mark that area, price return to it. Look at the candle. When price return to it, look at the candle that formed, this green candle. Can you see that? This is what we call hammer or pin bar. And this is when you look at the wick, the stick that you have with that candle, small body and long wick, it's a kind of rejection. Can you see that? Immediately you see this, you enter your trade after this candle here. Can you see that? Then it means you enter your trade after this candle, then you continue to ride on the trade. You know what I'm saying?
Yes.
That is what we call break and retest. It broke this high, then pull back. I know it came to this high, pull back. Then you want to wait for this area that was broken, the highest part of it that was broken when it was going up. Wait for it. Price will return to when you mark the level. Then look for entry opportunity. Then you take your trade. You understand what I'm saying? It's as clear as anything. And I cannot tell you even clearer than this. So if you have any question or something is not clear, you can watch this video because I will send you the link to download this video. You understand what I'm saying? You can watch this video again and again. So the next one we have is the price is going up here. It broke this high, right? This is the high again, where it started pulling back. So we come back, we come here, then we pull back. But the high that was the previous high that was broken, the highest part of it is here, right?
Yes.
Did the market return to the place? No. Market did not touch this place. It started moving on. No problem. Just don't enter a trade yet. Wait. It will give you what you want. Now, market started pulling up again, right? And immediately pull up. This is the highest part of the pullback that we broke because we pull up. So we mark the highest part, right?
Yes.
Did the market reach the place?
Yes, sir.
It returned to the place. And you can see this candle here is a signal that you can enter trade.
Yes.
You understand what I'm saying? Because it's a rejection candle. Then you enter your trade around here, then you take your trade up to this level. Can you see that? Even when you look at this around here, price still pull back, right? Any little pullback is a pullback. It doesn't matter. Can you see that? Then price broke it, then went up, right? Then where is the high that was broken? Around here, right? Let's mark that place.
Yes, sir.
Broken. That's what they call it, break and retest it. Break it, and you wait for it to come and retest it. Did the market reach there again? Yes. Market came back to this level. You look for a kind of candlestick. You discover that the same candlestick is what we've been saying since. Can you see?
Yes, sir.
If you train your eyeball, you see this thing clearly. You see that candlestick there. That one there. You see that candlestick there. Let me move it a bit to that place. Sorry. Can you see that candlestick there?
Yes, sir.
See that? Then immediately after that candlestick formed, once this candle started forming, it broke this high, then you enter your trade. You know what I'm saying? On and on and on like that. That is how to find break and retest. Look at this one again. It's easy to identify, except that if the person that trained you does not train you very well, that's why you can. Market started pulling back around here, right? Pull back to this place. Pull back to this place again, then give you another entry, right? Then we enter, we pull up. Then when you look at where is the highest part that we broke last? This is the place that we broke. So the highest, where we have the high that was broken. Can you see? Even when you look at this, Can you see? No matter how long it takes, market always return to test where it broke before. Then you see that we keep having the same kind of candlestick. Look at this when you go there. Can you see? Can you see this candlestick? Can you see? Can you see this candlestick? Can you see this one also? And immediately after that, you enter your trade, then you take your trade up. So that is how to identify. You know what I'm saying? So now we have about 3 or 4 trades that we have seen around here now. If we now go to 5 minutes, you will even see it clearer. Let me delete all these ones.
Okay, sir.
Let's go to 5 minutes.
Sir, I have a question, sir.
Okay, please ask.
Okay. My question is the time for a trade to last. How does it take?
No, if you are on 5 minute time frame, okay. You know what I'm saying? And you enter your trade, it means each candlestick will be 5 minutes, right?
5 minutes, yes.
Yeah, each candlestick, for example, on 5 minute time frame, this candlestick is 5 minutes, 5 minutes, 5 minutes. You will determine when your trade will lapse. If you are okay with the way the trade is being, you can leave your trade and continue watching it. That's not what I'm saying, until you are satisfied.
Yes, sir.
Nobody will chase you out of the market. You understand what I'm saying?
Yes,
so when we get to risk management, you will understand some other things. So let's continue doing this. So now let's go back to where we started initially. Where is that? Have we not gone beyond that? No, we've gone beyond that. Oh, maybe we've deleted. I've deleted it. Let's go to 1 hour.
Yes.
Mark that in. This 1 hour. And this is where we started, right?
Yes, sir.
So let's now go to 5 minutes. Yeah. So this is where we started, right?
Yes, sir.
Okay. So this is where we started. So when you look at this, don't forget we're discussing, we have done top-down analysis. Now we're discussing the strategy, the break and retest strategy. So we're on 5 minute time frame. So when you look at this one, now this is where the bullish trend started, where we have this black line, right? So now in bullish trend, the only thing we are looking to do is buy. We are not looking for sell. It's not what I'm saying, because you don't want to stand before a moving train. Can you hear me?
Yes, sir.
Okay, good. So what we have to do now is we already discovered that this is a bullish trend, right? We already know that this is a bullish trend. So once we know already that we're in a bullish trend, so the next thing we have to do is, sorry, someone is chatting me. Yeah, you are him, Brotolu, already. You are him already. I've already admitted you into the class, bro. Please connect again. So, Stephen, are you there?
Yes, sir. I'm with you, sir.
Yes, sir. So, let me just keep this somewhere here so that I can see it easily. Okay, good. So the next thing that we have to do now is that we already know that we're in a bullish trend, right? So we're looking for
Yes, sir.
we're looking to buy, and this is a 5-minute chart. So we're going to map, we are looking for break and retest. So when you look at this place, it formed a high around here, right?
Yes.
Then you wait for the pullback. We pull back around here. Then once you already have this, you will be waiting for this level here to be broken. This is the highest level it got. Then you want it to be broken. Then we have it broken already up to this level. Then you wait for price to retest the area that was broken. Did it retest it? Yes.
Yes, sir. Yes, sir.
Can you see? And you see the candlestick I told you to be looking for. Can you see this candlestick here?
Yes.
Can you
Yes.
see? That's a rejection candle. So the next you take your trade, then you ride the trade on until you get to this high here where it refers. So can you see that? And price started going. You see that? So that is
Yes,
how to look for break and retest. That is how to look for break and retest areas of the market. You see what I'm saying? So there is no, nobody can tell you anything otherwise except from what I have just shown you today. And if you are very, very careful and you are patient, I'm telling you sincerely, this strategy works like fire. It works like fire. So, and that's just what I can tell you about that. So let's look for more. Brotolu, you are welcome. I can see you are connected. You are welcome, Brotolu. Can you hear me? Please unmute your mic.
Yeah, I can hear you now.
Okay, good morning. So now I will send the recorded version of this class, and because we've gone far, we did. Let me quickly take you back to where we started. Stephen, please hold on. Let me just show something here. Now this is where we started. Brotolu, can you see the screen?
Yes, yes.
Okay, so this is the final class. So just to touch on everything we've been doing since. So the areas of discussion, we have top-down analysis, we have market structure, we have trading strategy. Under the trading strategy, we look at break and retest strategy. And this break and retest strategy is what I call it is discretionary trading. The discretionary trading is just simply because trader is using his discretion to enter a trade. But all this one, EMA 2150 plus RSI strategy, it is what we call mechanical trading. You are a mechanical trader if you look for entry signal based on indicators. You know what I'm saying? So there are two types of trader. We have mechanical traders and we have discretionary trader. So the two strategies that I've been using and that they have been working very well, those are the two strategies. So the entry candlestick that we'll be looking for before we enter our trade are engulfing, pin bar, shooting star, evening star. And we are going to discuss risk management this morning quickly, just very, very few minutes for that. So risk management is the most important thing that we have to do so that will enable that we stay in the market for a longer time so that we don't blow our accounts. So that's just a brief on what we have done before you came around. But as for top-down analysis, I cannot go back to that. So you watch the video because I will send the link to you to download it after the class.
Okay. All right.
Yeah. So let me share the screen again. So we are on 5-minute time frame. So can we all see the screen now? The chart?
Yes, sir.
Okay, great. So we are discussing, don't forget this is where we started. So we're discussing break and retest strategy. I will say that when you want to look for break and retest, it means when price is in an uptrend, you wait for pullback. You wait for pullback like this. Then this place where it pull back, it becomes your high. So your high, so you mark that area. You want price to break that area. Then when price started going in the original direction, let's say in an uptrend again, price broke this area. Huh? Then no matter how long it goes, then if it has not pulled back, then you pull back, you wait for price to pull back to reach this level. Then you look for your entry candle to join the trade in an original trend where it's going before. So you look for opportunity to enter. So once you can picture this, if you can look at this picture in your mind, you understand what I'm saying? If you can look at
Yes,
this
sir.
picture in your mind, you can see it on the chart. But if you cannot look at this picture in your mind, you cannot see it in your mind. You cannot see it with your eyes on the chart. So I want you to picture this in your mind, this particular area now, this particular diagram that I've done here. I want you to picture it in your mind. Let it remain like you are seeing it anywhere. You can even draw it on the paper. That is what you're looking for to enter a trade. You understand what I'm saying? For break and retest strategy. So let's now continue to look at it on the chart. Now look at this place. Price had a high here, then we return. That's a pullback, right? Then this pullback, we mark the highest part of it. This is the high around here that was broken by trade. So because this is when it pulled back, it went up and broke this area, right? Then you'll be waiting for price to return to this area that was broken. Look at it. Price return to this place, right? And you can see this candlestick, this green candle shows you that this area was rejected by the bulls. Can you see that? Then after this candle has formed, you enter your trade and you take your trade in a bullish trend. You buy, then you enter your trade and you continue to ride the trend. Can you see that? So that is how to do it. So next one is that you wait for price to still break a high that was formed. This was the high, the highest part that was broken by price, because when price was going up, it broke this place here, broke this place. You wait for price to return to that level again. Did the price return to the place? No. So you don't take any action. If it doesn't enter your trading zone, don't take any action. Don't be rushed in the market. Don't rush. Wait for the trade to come to you. Definitely the trade will come to you. So if it doesn't come to you, wait for it. So you pull back now. It didn't go there. It didn't reach your level. Just leave it. Market will always do what it wants to do. Just continue following market. This is the high again, where it pull back, right? So we now continue following the market. We broke it. Can you see that? We broke it up to this level. Then you will pull back. Price pull back. Price started pulling back. And when price pull back, where did it pull back to? Look at where it broke. It may take time, but price will do what you want to do. Can you see that? Can you see that? So that
Yes, sir.
So price returned and gave you a kind of rejection candle. Can you see this red candle here? It's a rejection candle here.
Yeah.
So it tested this high. Look at it. If I draw a box around that place now, can you see my box? Can you see that? So price return to it. Then you take your trade after you see bulls coming in after this green candle. So once this green candle has formed, you know they have stepped in again. Then after the green candle has closed, and form a good body, then you enter your trade and you take your trade up. Now, as you're taking your trade up, we broke this high again. Can you see that? Then,
yes, sir.
Then you mark this high, the highest part of it where we broke. Then let's look at what price is doing. Now, the next pullback, did price reach that place? No. Price pulled back, price did not reach this place. It stopped here. No problem. If you don't trade, you won't lose your money. You understand what I'm saying? So just hold on and continue following price. And one of the major tasks of a trader is patience. You have to learn how to be patient if you don't want to lose your money. So we still mark the highest part where we broke. This is the highest part we broke here. Then we mark it. Yeah. Then price reversed from that level, did not reach the place, move up again, but started reversing again. Where did we stop? We come and test. We came here. We tested this part that was broken here. You can see that though we entered deeply into it, but what later happened, price moved up and we can take our trade. You see that? So Then when you look at the high that was broken, because this is an area where price pull back again, you mark this high, you can see price return to this high also. Then you wait for it, price return to it, can you see? And then price do what? Take up from there, then boom. Then where is the high that was broken? The recent high. This is the high that was broken. You see, I'm seeing all these things clearly before me because I've trained my high balls. So you have to train your high balls to see them. You know what I'm saying? You can see market becomes wishy-washy now. You cannot tell the direction it's going. So in this kind of situation, you just wait and see what price is doing. And when you look at it, we broke this low here. Okay? We broke this low here. So showing that price may be tending towards downtrend. But even when you look at this small break that we have here, price pull back around here, because this is single candle pullback. We came down here, price pull back around here. Then we mark the area where we pull back. Price broke it. Sorry. Price broke it. Can you see? Then it returned. When you see, look at this one. This is the previous area we broke around here. Around here, we reverse around here. We broke this level here. Can you see what price done? Price returned to it. So we broke this level here. Then price did what? Price returned to it. Can you see that? And you can take quick scalp, just like 2 candles, 3 candles. Then before you know it, can you see? And this gives you a kind of W formation here. Then you take your trade. So let's look for another opportunity. Look at this again. Where is the high that was broken? You can see market becomes so that you cannot even, if your high ball is not trained very well, you will not see it. Look at this place. We broke this high. Anywhere price refers from is your high. You see that? Can you see? Then price did what? Though we broke it up, but look at it, price returned around here, then you take your trade up here. You see that? So when you cannot see market clearly, just stay out of the market. When you cannot see your trade, just stay out of the market. So that's for break and retest. So just quickly, that's for the break and retest. So I will delete all these things. Then we go to the next one, which is exponential moving average 21, 50, and so let me quickly install exponential moving average 50. And you go to your indicator, you go to moving average, you put 50. Then I normally use black for my 50. Then I put here. Oh, what happened? That's trend moving average 50. Then show exponential, then boom. Why is it splitting my screen? I don't know why this thing is behaving like this. Oh, there's another person that's joined the class. You're welcome, my brother. You're welcome to the class. Mr. Oyeshino, if you can hear me, you're welcome.
Good morning, sir.
Okay, good morning. So though you came in late, but the recording of this video will be forwarded. The link to download it will be forwarded to you so that you don't miss anything.
All right.
Yes, actually, I deliberately asked you to join this class so that you can see what we're doing. But some other preliminary areas where you need help, I will take you personally. You understand what I'm saying? Because you've missed some parts that when we started. So I'll take you personally on that. So nothing to worry about.
All right, sir.
Yeah. All right. So the next thing that we have to do is we want to install what I call it. Maybe I have to just what do I do? The moving average. We want to install moving average on this chart and it's misbehaving. Okay, good. Let's delete all these guys here. Okay, so I go to there, so I change this. Okay, this is 50 already, so I will change it to exponential, then fine. So this is exponential moving average 50. Now the way you use exponential moving average 50 is when you want to install, you go to your indicator moving average 50, then you come to moving average 50, moving average, put period 50, shift 0, then it's going to be exponential, then apply to close. You can use any color of your choice, then you say okay. So that's just it. So now, anytime, the way I use it, anytime we're trading above the moving average 50, I look for buy opportunity because this is binary option. It's very, very volatile. So anytime we're trading below it, I look for sell opportunity. Look at this. The way to do it is that if you are above the moving average 50, you look for buy opportunity. Don't forget this is mechanical trading and it's not discretionary. So look at it. Look at opportunity. Can you see this area now? Can you see this? Can you see all this place? Can you see this place now? Can you see that? So look at it. As price is reversing towards, you'll be waiting for price to come back to test the moving average. You're taking your trade. Who is that? Will you put your marshal? So we'll be looking for buying opportunity. Look at it. You wait again. Wait, and price touch the 50 moving average, exponential moving average, then you look for buy opportunity. Once you see bulls coming in again, you buy. Then look at this place. We started closing below the moving average 50. So you stay out of market now for you to know where they want to take trade. Then you still look at it, price broke above it, then retest it. You see this rejection candle here, then boom, you take your trade. So something like that. So you can see. So because this is short-term trading style, so that's why we use the moving average 50. So the next one we have to install is moving average 21. Then I normally use something like blue for that one. I use blue. Then I say okay. Look at it. Moving average 21 is a very short-term trading something. You can see as price is coming to it, you see price is testing it easily, boom. Price is testing it easily, boom, you look for buy. When price is above it, you look for buy. When price is below it, you look for sell. Let's delete moving average 50 so that you see what I'm saying clearly. We delete moving average 50. When can you see price return to it, you look for buy. Touch it, buy. Then look at what happened here. Price became so whipsaw that who is that? Price became so whipsaw that you cannot determine where the trend is going. So it means this strategy cannot work on this one as it is now. You just continue to look at the price and whatever the price is done. So and don't forget we are on 5-minute time frame. So let's go to 15-minute time frame. I click here, I change to 15 minutes. So for you to see that it works on every time frame. You can see how price is doing around it. You can see, so you can use it as a way of trade entry. When you are below, you're looking for sell. When you're above it, you're looking for buy. Look at it. Look at this place. We are whipsaw, so you don't do anything. So because it cannot give you any signal here, you can see that. So look at that one. Look at this place. So once price broke it up, you want to wait for price to come back and touch it. Once price touch it, you look for signal to enter your trade, either to buy or to sell. So let's keep looking at. Look at it. Price broke it, return to it around here, and return to the moving average 21 around here. Then you look for sell opportunity. Look at another opportunity here. It rejected, price rejected it. Can you see? Sell opportunity. So you can see that. So let's look for more for you to know that all these things are there. So if you train your high ball and you are not too in a haste, you can make money with all these strategies. So they are there for they've been there for a very long time. So look at it, this EMA 21, price broke below it, you'll be waiting for price to touch it. Price touch it here, it's treat like it's be selling. Let's say you enter your trade there, but it returned to a loss, because by the time you place your stop loss around here, the price will have taken you out. So it's a loss here. Now look at it. There's no strategy that is 100% maybe accurate. You just have to manage whatever you have from the market. Look at the price return here, then boom, you take your trade. Then touch it again, then boom, you take your trade down around here. You see that? So let's look at it. I want to quickly just talk on this so that we go back to the next thing that we have to do. Look at this place here. Price broke down, then try to test it. Then around here, you enter a trade. Then pull back very close to it, you enter a trade. You can see that. Then even this place, look at it. You can take a quick dollar in the market, let's say like little amount of money. It's a plus to it. You can see that. You retested this place again. Can you see the broke out of it, but it's a rejection. Then once you close below it, you take your trade down around here. You can see that. So that's to tell you how to trade with EMA. Can you see the opportunities are there? So only if you can train your eyeballs, you can see that. You can see this again. You can see this, but you have to wait because it requires you waiting. One of the major work that a trader does, what we learn as traders is we learn to be patient. Because if you are not patient, you will blow your account. And by the time you blow your account once, twice, you will learn your lesson in the market. So you have patience with the market. Can you see you take your trade around this place? You're looking for sell opportunity. Well, when the market is trending, it's very, very okay for you to use this strategy. Look at it, we cross above it. Then we came back to test this place. Can you see? Once this bullish engulfing, this bullish candle closes, you will enter your trade from here. Then you ride on until you see price touching it again, or you see price falling back again. You get out of the market. You protect your money that your profit that you have made from the market. We broke, then we came back to retest. Can you see? Then we drew another opportunity here. Can you see? Can you see? So that is just for you to know that all these strategies are there. We broke above here, then we wait until we touch the 21 EMA. Can you see? There is a whipsaw, but at the end of the day, it's a winning trade. So not so clean. So that's how to use EMA 21. You can see this also. We broke, then we came back to the test. You see rejection around here. You take your trade. Then around here also, you take a trade. Around here also, you take a trade. So that is just the way to do it. Look at this. Look at the bullish example. We broke, we came back, we take a trade. We went up again, we came back. Look at how this place was rejected. Then let's say you take a trade around here, take another trade around here. That is how to do it. Look at it again. I didn't form this thing. The market is there already. You can see. You can see. You can see. So now we are now going to add another extra filter to this. We're going to add a relative strength index indicator which is it's an oscillator really. So we go to oscillators, we go to relative strength index, RSI, relative strength index, then you use RSI 13, right? You use RSI 13, then you say, okay, apply to close, then say, so on your levels, you come to this place, you change, normally it will come with default of 30 and 70, but I normally like to use 80, 30, 80, 20, and 50. 50 is the midline, and 80 is the overbought, 20 is oversold. So we say, okay. So you can see, so what I'll be waiting for is if, hello, are you there?
Yes, sir. We are here, sir.
Okay, great. Okay, good. So now, for
We are here.
example, okay, thank
We are
you.
here too.
So if price is trading below this place, that's what I'm saying, the AME 21, I want to be adding confidence to see where is my RSI. There are two ways you can trade the RSI. Number one way is to look for when your RSI graph, when your line chart on the RSI, which is this green line, when you reach this 80 level, this is overbought level here. Look at this level. You'll be looking for signal to say, okay, price may reverse. And look at what happened. Let me drop a line there so that you can understand what I'm saying. Though it's in an uptrend, but look at what happened when it reached this place. Can you see? Can you see that price has started falling down? And you see this braid candle here. Then you can enter a trade, a sell around here. Then look at it. You enter a sell, let's say you even take profit around here or something like that. Look at it and look at what happened. What's happening here? Price from here up to this level. It went below 50 level. Can you see the 50 level here? Now the way to look at RSI is this. When this line is above the 50 level, you are in a bullish area. You'll be looking for buy. When this green line is below the 50 level, you are in a sell area. Look at it. Sell around here. Can you see? Can you see? Let me drop an horizontal line or the vertical line. Can you see? It's below 50, and the price is trading below AMA 21, which are two confluence for you to enter a trade. So you can enter a trade, and you can be riding your trade down until you see price. Until you see price, crossing above closing above, when it cross above the TME 21 or close above it, when you see this candle here, then you exit your trade. If you have taken a trade around here and the RSI is below 50 line, and you see it has come up to this level around here, and you can see that price close above it, then you exit your trade. Then you see around here, price is above 50 level here, you'll be looking for buy, and look at what happened here again. Price is above EMA 21. Price is above EMA 21 around here. Can you see that? It's above EMA 21. Look at it. You bought around there, and look at what happened. Can you see? Until you close below EMA 21, you want to leave your trade, and look at it. Price is above 50, even on RSI. Then when you close below the EMA 21, this particular candle here, look at what happened to price on the RSI. Look at what happened to price on RSI. Price has crossed below 50, signaling to you that the downtrend has begun. You see what I'm saying? So even look at this place also. So these signals are there. It's only if you can wait and you can see it. Look at it. Price has crossed below EM, the 50 level of which is a sell area. This is buy area. This is sell area. Then you can see the price is below 50, 21 EMA. Then you can take a sell trade. Then until you get to this level, then when price close above the EMA 21, then you exit your trade, you take your profit and leave the market. You can see that I'm priced here. Look at RSI. When you look at RSI, you see it touched the 50 around here, but that's close. It's a signal that price is about to reverse. Look at it. And at the end of the day, what happened? Price reversed. And when you look at the price close above EMA 21, then RSI is above what I call it, it's above 50 level. So which is a buy zone, this is a sell zone. Below 50 level is sell zone. Above 50 level is what I call it, buy zone. Now that's how you can trade along RSI and EMA 21. So that is just that. So quickly before we conclude, because our time is running out on the Zoom, the time that we have. So now the next thing that we have to look at is risk management. What is risk management? Risk management is nothing than how do you manage your money in the market? How do you manage the money that you are trading with? You understand what I'm saying? That is all about risk management. That's just it. So if, let's say for example, you are trading with, let me pull out my calculator. Sorry, just a moment. So I'll be sharing my calculator with you now so that can you see my screen?
Yes, sir, we can see, sir.
The calculator, right?
Yes, sir, we can.
Okay, good. So let's say you are trading with $100. That's what you are trading with. I will advise you, anytime you want to enter a trade, you should enter a trade at 0.001. The maximum you should enter is 0.002 on volatility 75. It's not what I'm saying. On volatility 75, 0.002 or 0.001. So we have 5 minutes to leave this class. So let me share another. Let me share another screen so that let's quickly go to our chat again so that now if you let's say for example, can you see my chat now? Just quickly.
Yes.
Okay, so let's say for example you enter a trade here. Let's say you enter a trade here because the price has moved below this place. Here it has closed below the EMA 21. Where do you place your stop loss? Your stop loss is the amount of risk you are ready to take from the market. You know what I'm saying? Your stop loss would be around here, around above here, above the high, the recent high. You know what I'm saying? We all know that until market reversal commences, market will never reverse up to the recent high or break above the recent high. So your stop loss should be placed above the recent high here so that you protect it. So once you start moving down, price has started moving down. Once you are in profit, you can now move your stop loss very close to price, or you trade your stop loss above the 21 EMA. Can you see that? Can you see as I'm moving this? So once price here has closed above this, above the EMA 21, then what you do is that you take out your profit and you move on. You know what I'm saying? So, and in a buy situation, let's say you buy around here. Let's say you buy, when you close around here, you buy, let's say you have bought around here. Your stop loss will be at the recent low, below the recent low. This is your stop loss will be. You place your stop loss around here. Then you continue to trade your trade. Once you are around here, once price has given you some profits around here, then you can move your stop loss because this is your entry. You can now move your stop loss up to this level here. So even if the market reverses against you, you are not losing this trade. You're still going home with some profit because you've locked in some profit between here and here. Because this is your stop loss now. Can you see what I'm saying now? So you can now leave your stop loss until price started reversing up to come and break this level. Then you get out of the market. You saw what I'm saying? So it's just, let's say you bought around here. Price closed above here. Then you bought around here. Then you're looking for stop loss. Your stop loss will be at the swing low. the recent swing low here. You can see. Then once price has given you some profit, you taking the case in, then you lock in some profit by taking your stop loss, adjusting your stop loss to be somewhere around here. So even if price reverses around you, you're still going home with something. You are not losing your money. You can go home with like $10, $30, $50, depending on the lot size you are using. But you are not losing like minus something from your account. So that is how to do it. But don't ever be greedy in the market. That's one thing that I have to tell you. Don't ever be greedy. If market gives you $10, take it with joy and move on. $10, the market does not owe you anything. So whatever the market gives you is an additional opportunity that the market has provided for you. So don't be greedy, be contented with less, and until all the conditions that you are trading with are met, don't enter a trade. You should be able to write down your trading plan. What type of trading I want to do, break and retest. So you know that until market return to your zone, you don't want to trade anything. You don't want to enter any trade. Don't be tempted to enter a trade. You understand what I'm saying? So and if it is a mechanical trading that you think until market breaks below EMA 21, you don't want to enter any trade. Once it broke below EMA 21 and RSI 13 is telling you that it is below 50, yeah, then you can enter a trade. So once all those conditions are met, you enter your trade. If your conditions are not met, let your trade continue to look at your chart. Then if you don't trade, you won't lose your money. So, but once your conditions are met, you discover that I've shown all these things to you this morning. I didn't make them up. They are the way I trade. They are the ways I look at the market. And those are the ways I've been trading. And at least, no matter how small, I will take $10, $20, $50 out of market. At times I take more. You see what I'm saying? I don't want to be greedy. These are the things that you just have to understand as a trader. Major work of a trader, as a trader, one of the major tasks you have to learn is how to be patient. You have to know how to wait for opportunity like a sniper. That if you see a sniper in the American film, that sniper will wait until the target is met and before he shoots his bullet. You know what I'm saying? So that is just it. So our time is far gone. So I want to wish you well. Whatever question you have, you can chat me up on WhatsApp and I will answer your question. If I don't answer, don't worry, I may be busy, but I will definitely return to you. So thank you.
Thank you, sir.
All right.
Thank you.
We'll be closing. I will send you the PowerPoint presentation and this link to download this particular class. So I wish you well. If you have any question, please link up with me.
Sir, I want to remind you about the demo link you said you will send, sir.
Okay, great. I will send it.
Okay, sir. Thank you very much, sir.
Yeah, bye.
Yes, sir.